what are jumbo loans? As I've told you many, many times, our goal here on Ronsigo Radio is to educate you. We bring out a lot of different information, different resources. I think there are items that people are going to find valuable. We put them all in our workshop section on our YouTube page, on our Vimeo pages, all of our social channels. You can find all of the ones we've done. We've done why you don't need 20% down and no mortgage insurance and veterans loans and first-time home buyers. So today we're going to talk about what are jumbo loans, and obviously I look forward to helping you learn about the jumbo loans and how they work. You know me, right? I've been doing this for longer than I care to admit. All the way to the turn of the century, maybe even a little before that. Started buying homes back in the early 80s, about 2,300 radio stations. We're probably pushing 2,400. I think that 2,300 number might be a little bit old, but probably pushing 2,400 radio stations or radio shows. Right now, I think there's 3 stations that are carrying us. So we've got some good information for you, we hope. Today, we're going to share what jumbo loans are, how they work, the process it takes to get one. So let's get with it. So you start off, you're shopping for a home. One of the most important steps in shopping for a home is identifying the type of mortgage that you qualify for and is best for you. That's the big issue. But if you live in an area where home prices are crazy high, then you may not qualify for the conforming home loans. You may, in fact, need a jumbo home loan. It's important to understand the ins and outs of the jumbo home loan. So what are jumbo home loans? It's a mortgage loan that exceeds the limit set by the Federal Housing Authority, otherwise known as FHFA. Jumbo loans cannot be secured by the government-sponsored Fannie Mae or Freddie Mac, which makes them riskier loans for lenders. That's the issue right there. Jumbo loan limit, each year, Fannie Mae, Freddie Mac sets limits on how high the mortgage can be that they'll purchase on the secondary market with their conforming loan limits. Loan limit for 2022, we don't have that exactly yet. The rumor is $625,000. The loan limit for 2021 was $510,400. Anything above would be a jumbo loan. Anything below that is considered a conforming loan. There are high balance loan limits in high cost areas. There's an interim level where you could choose to go conforming or jumbo. So we're watching for the new numbers to come out right now. Now, of course, you can get a little bit more complicated than that because there's several areas across the country, like in California, Hawaii, and Washington, that have what's called the high balance loan limits. Now, it really gets confusing here because Riverside County, San Bernardino County, those are basically conforming only. Los Angeles County, Orange County, San Diego, Ventura, we have higher limits than that. But we're going to keep it simple, and essentially anything above $510,400 we're going to say is a jumbo loan, and I just told you that's probably going to go to $625,000 for next year. Options with jumbo loans. You get a jumbo loan in a variety of terms and repayment schedules, can be fixed or adjustable rate loans. They do have stricter requirements. Why are they stricter requirements? Well, it's because they're riskier. They work differently than conventional loans because they have these stricter requirements than the other types of loans. And you'll have to meet specific property types, down payment requirements, credit scores, debt to income ratios. So let's go over the qualifications to start with. Let's talk about the down payment and how much down payment you need to qualify for. In general, jumbo loans require more down payment than a conforming loan. It's common to see lenders require 20% down on jumbo loans for a single family residence. There are programs that will go lower. Yes, there are doctor programs that'll go lower. There are some mortgage insurances that'll cover it. There are some investors that just say, something, we're going to go to 85 or 90% loan to value. That means 5 or 10 or 15%, 5% down. You can also do that. Reserves. So the lenders will require, in some instances, reserves. They want to make sure there's money available, liquidity after closing. It's required to show that you have a few months of payments in the bank. They want to make sure that if they're going to lend you money, that you can pay it back. Again, because these loans are set by individual entities, they kind of get to make their own rules. So they're not always going to be the same. So you might go to one bank and they've got one set of rules, and they might tell you you do not qualify. Well, I've told you before, don't go to the bank. It's not a good place for you to go for home loans. Go to a mortgage broker, a mortgage banker. Why? Because they know what the banks are looking for. They're your personal shopper. So now let's talk about down payment. How much down payment do you need to qualify? In general, jumbo mortgages require more down payment than a conforming loan. It's common to see lenders require 20% down for loans for a single family. I already talked about that one. Let's move right along. Credit score, right? Your credit score is a major factor when it comes to getting a jumbo mortgage. You'll usually need a credit score of at least 700 to get a jumbo loan for $1 million and 720 for jumbo loans between $1 million and $1.5 million. If you're going over $1.5 million, you'll probably need 740. Again, when you call a mortgage banker or a mortgage broker, they are out there doing the shopping to see who may have an interest, an appetite for something more than that. Debt to income ratio. Your debt to income ratio is also a factor. You'll need a debt to income ratio, usually between 40 and 45% in order to qualify on most jumbo programs. The lower the industry standard, the lower than the industry standard, 50% debt to income ratio. So that's what you can get on a lot of loans, but there's only a few places to get those 50s. So again, mortgage banker. So when it comes to jumbo loans, the interest rates are typically higher than the standard convention, and they have stricter qualifying guidelines. Whatever loan you're getting, there are always closing costs, which can range between 3 to 6% of the total value. This can add up for a jumbo loan, so you want to be prepared to cover your closing costs in addition to your down payment. Jumbo loan qualifications typically are more stringent than conforming loans. Your lender will want to see up to 2 years of W-2s, tax returns, 1099s. Bottom line is that jumbo loans are out there. They are not that difficult to get, but you'll need to be prepared to have more money down, have great credit and reserves, be prepared to share more income documentation. And that's why we say call you, let's plan ahead. It's important to consider every requirement before you get a jumbo loan. But once you're ready to go, make sure you're working with a licensed mortgage lender who can help you navigate through all the details and get you into your dream home. If you want more information, give me a call, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just go to info@ronsiegelradio.com if you have any questions. I am here. Our team of educators is here to help you, and we appreciate you taking a look at this workshop that we have for you. Love putting together the workshops and sharing the information for you.